Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Trust you've all had a good weekend, catching up with family and friends, and recharging for the brand new trading week. All right, hi Jamilo, good to see you once again. Before we begin today's webinar, right, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra. This webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look what's coming up on the economic calendar for this week. There's quite a few things going on, but I want to bring your attention to the labor market reports coming out of the US, as well as the monetary policy announcement by the Bank of England. Right, hi Ren, good to see you as well. Yes, definitely we can cover the cable and the Aussie, right? We'll of course start off with the dollar index, work our way through some of the major currency pairs such as the cable and the Aussie, touch on the commodities, crypto and the indices, right? And of course, if you have any other analysis requests, do not hesitate to drop those requests in the chat box here, and do drop them in early so we have time to go through the analysis together, right? Don't wait till the end to drop any requests in this chat box. Right, so as I mentioned, there's quite a few things going on in the calendar this week with US jobs data being the highlight, and in sandwich in between the two key employment reports is the monetary policy announcement by the Bank of England. Right, so this is the economic calendar for this week, and take note that the time here is displayed in GMT time. Right, so today we've got the OPEC meetings taking place today as well, and any changes to voluntary production cuts by OPEC and OPEC Plus members could have a huge impact on the direction of oil prices. So take note of the outcome of this meeting, right? That should be concluding later on today. We also have ISM manufacturing PMI data out of the US at 3 p.m. GMT. And tomorrow we have Joel's job openings and the labor force report from New Zealand. And Wednesday at 1:15 p.m. we have the ADP employment report, followed by the ISM services PMI. And then on Thursday at 12 p.m., the Bank of England is widely expected to cut its official bank rate by 25 basis points to bring it down to 4.5%. And of course, on Friday, not only do we have Canada's labor force report, we also have the non-farm payrolls and the unemployment rate being released by the Bureau of Labor Statistics. Now, taking a slightly closer look at uh, the upcoming monetary policy announcement by the Bank of England, right? We can see that at the previous meeting, right, which was in December 2024, the Bank of England left its official bank rate on hold at 4.5% as they had concerns regarding the level of CPI inflation, wage growth, as well as inflation expectations, right? However, some board members also cited the sluggish demand and weakening labor market uh, at that point in time. So although the Bank of England stayed put in December's meeting, right, keeping rates on hold at 4.75%, they are now widely expected to reduce the official bank rate by 25 basis points to bring it down to 4.5%. And we can see that part of this reason is due to inflation moderating slightly lower for the month of December. Right, so on the left, I have the chart for headline CPI, and on the right, I have the chart for the core CPI for the UK. We can see that from September to November, headline CPI accelerated from 1.7% to 2.6% year over year. However, December's reading edged slightly lower, right, to 2.5%, while the core as well, dropping from 3.5% in November, going down to 3.2%. So although inflation continues to remain above the Bank of England's target, the BOE's target of about 2%, right? It seems to be heading in the right direction, and combine that with weakening labor market, right? We can see that all the components are pretty much in place for the Bank of England to move ahead with its rate cut on Thursday. So on the left, I have the chart for an employment change. This is basically similar to the non-farm payrolls, right? Monthly employment change. And on the right, I have the chart for the unemployment rate. So we can see here what was a strong second and third quarter in 2024 where employment change grew rapidly. We've seen a strong decline at the level in the pace of job creation in the last quarter of 2024, right, with only 36,000 jobs being added to the UK's labor force for the month of November, right? So the rate of job creation has slowed down significantly in the last quarter of 2024. And at the same time, we've also seen the unemployment rate edge higher from 4% in August to as high as 4.4% in November. So we have all the ingredients that is going to that's going to cause that's going to allow the Bank of England to move ahead with its rate cut, right? The first rate cut of 2025. However, the details will be in the statement, and whether the outlook on future monetary policy action is going to be dovish as well. So should we see a statement that's fairly dovish with regards to the outlook on future monetary policy action, we can expect the cable to sell off quite strongly on Thursday. Right, now taking a look at the employment reports out of the US. Up first is the ADP employment report by Automatic Data Processing, right? This is a private company that tracks private payrolls. It doesn't include government workers, right? So this report only tracks the number of jobs that are added to the labor market, to the US labor market, from the perspective of private companies. Now, this report is going to be released on Wednesday, 5th of February at 1:15 p.m. GMT. Now, we can see very clearly in the chart, right, that since October, job creation as reported by the ADP has slowed quite considerably, right, rising about 146,000, about 146,000 in November, and adding just 122,000 in December, right? This was the least amount in 4 months, and it was also below the forecast of 140,000, right? So with a slowdown in both hiring and pay gains. So we can see job creation has slowed over the last couple of months, falling under the 12-month average of 152,000. Now, when we look at the estimate for January, we are expecting a nice rebound, a small rebound in job creation, with about 149,000 jobs expected to be added to the labor market. Now, this figure, or this forecast, is clearly below the 12-month average of 152,000, right? So we may see it's also something to take note of, as well as although it is a nice rebound in the level of job creation, it still sits below the 12-month average. And should we see a final figure that's going to perhaps miss the forecast of 149,000, right, this could have a pretty strong near-term impact on the dollar, right? We could see an ADP miss functioning as a near-term bearish catalyst for the US dollar. So take note, although job creation is expected to rebound for January, however, if it misses the forecast and comes in weaker than 149,000, this could function as a near-term headwind for the US dollar. And finally, on Friday at 1:30 p.m. GMT, the Bureau of Labor Statistics will release its employment report, where we will get a look at the unemployment rate, which is the chart on the left, and the non-farm payroll change, which is the chart on the right. So the difference between these two reports is that the Bureau of Labor Statistics, BLS, reports job growth for both the private and government sectors, whereas for ADP, it is purely looking at the US labor market from the perspective of private payroll. So take note of the difference between these two employment reports. Now, so you can, in a way, you can say that the BLS employment report is a much more complete or it gives us a much more complete insight into the state of the labor market. Now, we can see unemployment rate has edged higher, right, in the middle of last year, climbing as high as 4.2%, and it edged down lower to 4.1% in December. The unemployment rate for January is expected to remain unchanged at 4.1%. And what we can see here, right, November and December, we saw a strong rebound in job creation as reported by the non-farm payroll. So we can see in the second and third quarter of 2024, we saw pretty weak job growth, but we saw a strong rebound in November and December, right, climbing above the 12-month average of 186,000. And not only was December's figure pretty high, right, it was the highest level, almost the highest level in the second half of 2024, right, by with a figure of 256,000 jobs. It also easily beat the market forecast of 160,000. However, now we see that job creation is expected to slow slightly, with just 154,000 jobs being added to the economy in January. Now, similarly to the ADP employment report, if the non-farm payrolls miss as well, right, if you do see non-farm payrolls miss or failing to beat the forecast of 154,000, this is certainly going to inject extreme volatility into the financial markets, and we can expect the US dollar to sell off quite strongly. So take note, uh, if we do see the non-farm payrolls report a miss in this week's data, right? Certainly, we can expect this recent strong rise in the dollar to be limited as we end off the trading week. Right, so with that, now let's move on over to the charts and trading view and begin the analysis on the dollar index. Right, so here I am on the daily time frame, right, and we can see that the announcement of tariffs, right, the announcement of tariffs by the US on countries such as Mexico, Canada, and China have created a strong surge in demand for the US dollar. So it all started from Friday, right? Basically, it all started from Friday, 31st of January, when the White House reiterated President Donald Trump's plan to impose the sanctions on those countries, right? So just the announcement of the reiteration of the trade tariffs created a surge in demand for the dollar index as it went from about 107.90 to as high as 108.55 before closing at around 108.50. Now, as the trade tariffs were implemented, right, the trade tariffs were implemented on Saturday and come into effect this week, we can see that markets gapped open, right? Many of the markets, as we filter through the list, we will see huge gaps taking place across many of the instruments here, right? So this gap here, right, was fueled by the implementation of the trade tariffs on the trading partners such as Mexico, China, and Canada. So we can see here the dollar index hitting a high of 109.87 earlier today and looks to be pulling back slightly as we speak. Right, okay, so let's now begin the analysis starting with a daily time frame, and then we'll work our way down to the 4-hour time frame as well. Right, okay, looking at resistance, right, okay, clearly the first resistance at 109.64 is a swing high that had taken place on Monday, 13th of Jan, and this is also a level that's accompanied by Fibonacci projection at 61.8%. So this projection level was found here starting from point 1, 6th of December, going up to point 2, the swing high on the 13th of Jan, and ending at point 3, the swing low on the 27th of Jan, right? And also, right, the pivot level is actually now a nice overlap support, right, at 107.49, right? We can see the dollar index bouncing off this level last Thursday, right, and earlier this morning, right, I had called for a nice continuation of the bullish bounce, right, and that has played out exactly as markets reopened today, right? So we saw the dollar index stabilize off the pivot last Thursday, right, before closing at 108.50 on Friday, and this morning, right, we were looking at a potential continuation of this bullish rise for the dollar index towards the first resistance, which is what has played out quite nicely today. Now, on this uptrend here, I believe we can also run a Fibonacci retracement from this swing low on 6th of December going up to the swing high here on the 13th. When we look at all the fibs, right, we can see that the 61.8% retracement sits quite close to the pivot, right? The pivot is an overlap support, so we can keep 61.8% in the analysis here. And also where the first support sits, right, the first support is a pretty decent overlap level as well, right? Maybe, right, you can see here, right, there's a few cuts over here as well, and this part here is not so clean. Maybe for me, I'm more inclined to identify this overlap level here at 105.44 as the first support, right? This is a much cleaner level here, I think, and this level is also accompanied by a Fibonacci retracement at 50%. There we go. Right, so we've seen a nice bullish bounce materialize for the dollar index, and it looks to have stalled at around close to where the 61.8% Fibonacci projection sits. Now, coming to the 4-hour time frame, right, we can see that the dollar index is indeed pulling back, of course, after such a strong rise earlier today, right? We can definitely expect some sort of pullback, and I think any pullback could be a potential area for the dollar index to stabilize and continue the uptrend. Right, but remember, come Wednesday we have the ADP employment report, and on Friday we have the non-farm payrolls. If both of these reports point to a weaker than expected labor market in the US, right, we can then expect demand for the dollar to start to weaken, and perhaps the dollar index could slide even lower. But I think in the first half of the week, right, in the first half of the week, I think any pullback for the dollar index could be an opportunity to go long once again. Now, where could that pullback support level sit at? Right, I see a pretty decent pullback level here. Right, it's a pretty decent pullback level at around 108.92. Right, we can see the dollar index stabilizing above 108.92 in the second week of Jan, and then again finding support from the 15th till the 17th of Jan as well. So pretty decent pullback support level here. So, and we can also see that there's a nice uptrend that begins from 27th of Jan. So we can run a Fibonacci retracement from this swing low, 27th of Jan, going up to the high of today, 3rd of February. And when we look at all the fibs, right, we can see that the 38.2% retracement, right, sits pretty close to the pullback support as well. So we've identified a pretty decent support zone for the dollar index at around 108.90, right? So between 108.80 and about 108.90 is where I see a nice support zone for the dollar index, right? And if this pullback reaches this zone here, right, maybe by the end of today or tomorrow, right, it gives us a pretty good opportunity to go long on the dollar index once more. But remember, all that could change on Wednesday and Friday, right? Especially if the jobs report point to a much weaker labor market, then we are quite likely to see the dollar index slide even lower. But of course, but in the first half of the week, I think any pullback for the dollar index is likely to result in a pretty decent buying opportunity. And where that could take place is at this support zone here, right? This pullback support zone, or this support zone that's identified by a pullback support at 108.92 and the 38.2% Fibonacci retracement. All right, okay, let's move on over to the cable, right? Because we have the Bank of England coming up on Thursday, right? So let's identify where the key levels sit at. But of course, since the Bank of England's announcement takes place on Thursday, some of these levels could change as well. So just be mindful of that. Right. So looking at the British pound, US dollar, otherwise known as the cable. Right, we can see that this currency pair continues to trade underneath the red Ichimoku cloud, as well as trading in the downward channel here, highlighting the ongoing bearish momentum. We can see here there's a few touches to the upper trend line of the downward channel, and a couple of touches to the lower trend line of the downward channel as well. Right, so we saw a nice reversal materialize last week, right? We saw a nice bearish reversal materialize for the cable last week, right? It was pretty much at the intersection of the upper trend line of the downward channel and a pullback resistance at 1.2493, right? We can see that this level served functioned as support on 22nd of November, then again from 19th of December till the 30th of December before finally giving way, and then it proceeded to function as a pullback resistance last week, right? Last Monday and Tuesday functioning as a pullback resistance for that bearish reversal to take place. And as it gapped lower this morning, right, expecting it to slide, continuing to slide lower towards the first support at 1.2162. Now beyond, beyond the pivot, right? The pivot is now an overlap resistance, right? After this resistance is formed, this level at 1.2493 is now an overlap resistance, which is accompanied by a Fibonacci retracement at 61.8%. We found this retracement level starting from this swing high on 6th of December, going down to this swing low here on the 13th of Jan. You can see the 61.8% retracement alongside the overlap, identifying a strong resistance barrier for the cable. Now higher up, the next resistance looks to be at this swing high that has taken place here on 10th of December, and this level sits at 1.2770 and is also accompanied by a Fibonacci retracement at 50%. Right, this retracement was found starting from this swing high on 26th of September, going down to the swing low here on the 13th of Jan. Right, so that's how this 50% retracement was found. And I think any retracement to the upside for cable, right, especially in the first half of the week, could be an opportunity to go short once more and targeting the first support at around 1.2160 or 1.2170. But take note, this is more likely going to be for the first half of the week, right? And remember the macro data, right? The US labor market data is likely to drive the direction of the value of the dollar index in the second half of the week, and naturally that's going to impact the currency pairs such as cable and the Aussie as well. Right, now let's move on down to the 4-hour time frame. Right, we can see here the cable dropping as low as 1.2250 earlier today before making a retracement to the upside. Right, and when I look at this level here at around 1.2368, this looks like to be a pretty decent overlap resistance as well. So any retracement, any continued retracement to the upside, I reckon could stall at this overlap resistance at 1.2372, right? So I think we are likely to see cable remain under pressure, and any retracement to the upside could stall at around 1.2372, and we may see a resumption of the downward slide, falling towards 1.2200, right? Okay, in terms of the levels, right, I think what we've identified on a daily time frame is more than applicable on the 4-hour time frame as well, right? And let's see if there's anything else to highlight. Maybe, right, if the bearish reversal does indeed take place, right, maybe I would say I spot a pretty decent overlap level at 1.2248, right? I would say this is where we can identify the first take profit target, right, for cable, and of course if it continues to slide lower, we can then identify the second take profit target close to the first support, which is at 1.2162. Right, okay, let's move on over to the Aussie. Right, let's move on over to the Aussie, and then we'll take a look at dollar yen before moving on to onto the commodities, touching on spot gold and then crude oil. And of course, do remember to smash the like button on YouTube as well. I'd really appreciate it if you guys can hit that smash button, and as well as take part in the poll, which I'll be launching later on. All right, so looking at the Aussie, right, we see a huge gap down for the Aussie as well. And earlier this morning, right, we're looking at a potential bearish breakout through the pivot, right? The pivot at 61.44 is a significant swing low support that had taken place on Monday, 13th of Jan, right? So the the bearish breakout did materialize in the first half of Monday, right, with the Aussie dropping as low as 60.87, but since then it has retraced higher. But I think similarly to the cable as well, any retracement to the upside could be an opportunity to go short on this currency pair once again. Right, in terms of resistance, there's a nice overlap resistance at 63.01. We can see a nice base being formed here in the first week of October. Nice base being formed here, right? And once this level gave way on 18 December, this swing low support can potentially function as resistance, and which is what has occurred not once but twice. First on 6th of Jan, and the second time on 24th of Jan. So this level at 63.01 is now an overlap resistance that we've identified as the first resistance here. Right, down below, right, we've covered dollar franc as well. Yeah, sure, no worries. We'll cover dollar yen, then dollar franc before moving on over to the commodities. All right, okay, so and in terms of support, 59.90, right, we're gonna have to zoom out a little bit for that and look at where the Aussie was trading back in April of 2020, so nearly 5 years ago, right, as the Aussie was coming off its COVID lows. It made a small pullback here to make a swing low on 3rd and 6th of April, making a nice swing low bounce here, which we have now identified as the first support. And this swing low is also accompanied by a Fibonacci projection at 61.8%. We found this projection level starting by running a projection from here, starting from 0.1, 7th of November, going down to 0.2, 13th of January, and ending at 0.3, which is at 24th on Jan. Right, so we can see the 61.8% projection aligning very well with the swing low support at 59.90, which has been identified as the first support. Now, let's zoom on down to the 4-hour time frame, and we can see what was initially a sharp, a very strong bearish breakout for the Aussie, right after dropping as low as 60.88, is retracing higher. However, I think any retracement to the upside is likely to be limited as well, and I think where it could run into resistance is at this pullback level here at 61.72. Right, this level previously functioned as support here on 14th of Jan, and then again on 17th of Jan as the Aussie made a strong retracement to the upside here, and after making this huge gap, perhaps this is where any retracement to the upside is likely to stall and reverse to continue the downtrend. So any retracement here, right? We can see here the Aussie is attempting to come back to its opening price of this morning, but I think it's likely to remain restricted at least in the first half of this week, right? Remember, in the first half of this week, I think any retracement to the upside is likely to be limited, and we may have another opportunity to short the Aussie should it reach 61.72 once again, right? And if that bearish reversal does take place, right, we can then target uh, several levels, right? First, take profit target that I would identify is the swing low of today, right? The swing low of today is at 60.87. So any bearish reversal, should there be any bearish reversal that materializes today or tomorrow, right, then I would identify the first take profit target at 60.87. And of course, if this currency pair continues to slide even lower, then we'll be looking at around 60.50 and finally 60 cents to identify the subsequent take profit targets, right? In terms of I think we can probably run a Fibonacci retracement from this swing high here on 24th of Jan, going down to the swing low of today, Monday, 3rd of Jan. We can also see that this pullback resistance is also accompanied by Fibonacci retracement at 38.2%, right? And maybe it's the 50. Let me just check if there's 30 and 50 that I want to highlight, right? We can see the little bit of support here as well. So I like to highlight this zone as a pretty decent resistance barrier as well. Right, so take note here. We could see further downside action for the Aussie in the first half of the week, and if that bearish reversal does take place, right, the first take profit target that I would identify would be the swing low of today, that's at 60.87, and then of course if it continues to slide even lower, I'll be targeting 60.50 and finally 60 cents as the subsequent take profit targets. All right, now let's move on over to dollar franc first, right? Let's take a look at dollar franc. And we can see here dollar franc has rebounded strongly last week of the pivot, right? The pivot at 90.10 was overlap support, right? We can see, and actually if you stretch it all the way, okay, till here, probably not so relevant, but yep, over here we can see a swing high being formed on 19th of December, and once the bullish breakout took place on Monday, 30th of December, this level functioned as support on the 6th of Jan, thus creating a nice overlap level, which the dollar franc once again stabilized on Monday and Tuesday, 27 and 28 of January. So you can see here the pivot level at 90.10 is a pretty significant overlap. That's also accompanied by a Fibonacci retracement at 23.6%. Now this retracement level was found starting from this swing low on 6th of September, going up to the swing high on Monday, 13th of Jan. And the dollar franc, right? And dollar franc is has hit the first resistance at 91.93, right? This is a pretty significant barrier here. This is actually a multi-swing high resistance, with the first swing high taking place on 1st of May, and then the second swing high taking place on 13th of Jan, right? So once again, this is where the dollar franc has stalled. So once the gap up occurred and dollar franc was rising strongly, right, I would have identified the take profit target for any long trades on dollar franc close to the first resistance at 91.93. But it's pulling back now, so let's see if there's an opportunity to identify a pullback buy entry for the dollar franc, and for that we'll do that on the 4-hour time frame. But before that, I just want to highlight the first support, right? The first support beyond the pivot. Remember, the pivot is an overlap support at 90.10. There's also another overlap, and this time it's at 89.13. Right, this is an overlap support That's accompanied by Fibonacci retracement at 38.2%. And we can see a nice resistance being formed here, a little pullback resistance being formed here, or mini swing being formed here on 23rd of July. Then we see a nice swing high being formed here on 14th of November. Of course, we see this breakout takes place, but was more for like a false breakout. And then once a much cleaner breakout took place in mid-December of last year, this level functioned as support before bouncing higher. So pretty decent overlap level that we can identify as the first support, and it's also accompanied by Fibonacci retracement at 38.2%. Now, on this uptrend here, that begins from this swing low on 6th of December, we can also run another Fibonacci retracement, right, from this swing low of 6th of December going up to the swing high on the 13th of Jan. When I look at all the fibs, right, I can see that the 38.2% retracement aligns very well with the pivot, and the 61.8% retracement also aligns very well with the first support. So let's keep these two retracement levels on. Now, as I mentioned, right, dollar franc has hit the first resistance and is pulling back as we speak. Let's move on over to the 4-hour time frame and see if we can identify any potential pullback level, right? Another opportunity here. Now, looking across, of course, naturally the gap here, the big gap here that has materialized earlier today, right, would be one potential pullback level, right? Pretty decent pullback level here at 91.14. So if the gap is indeed closed for the dollar franc, right, the gap for the dollar franc is indeed closed, right, this could be a pretty decent area to identify any opportunity to go long on the dollar franc once more. And on this uptrend here, we can also run a Fibonacci retracement starting from this swing low on 27th of Jan, going up to the high of today, right? And I believe the 23 and 38% retracements will help us identify a pretty decent support zone, right? So we have a pullback support at 91.14 and the Fibonacci retracements identifying a pretty decent support zone as well. So should we see dollar franc pull back into this area and stabilize, it's going to help us, it's probably going to help us identify another potential opportunity to go long on the dollar franc, right? So these are the key levels here for the dollar franc on the 4-hour time frame as well as on the daily time frame. All right, now let's move on over to the commodities, starting with spot gold. Right, so we can see here, let's zoom in a little bit. Right, we can see that since 19th of December, spot gold has been in a strong bullish uptrend, and I think I can even identify a nice bullish channel as well, beginning from here, 30th of December, right? It's a pretty decent bullish channel that I would like to highlight. So we can see here, spot gold has actually bounced off the pivot, right? It has actually bounced off the pivot earlier today, right? The pivot is actually a pullback support level at 2,771, right? The previously on 24th of Jan, as gold prices were rising strongly, it stalled at around the prior all-time high, right? The prior intraday all-time high for spot gold was formed on 31st of October, and that was at $2,791 or $90 per ounce. And this is where it ran into resistance last week or 2 Fridays ago, sorry. And then it has bounced off this level very nicely, right? So the pullback support is now an overlap, which we have identified as the pivot, right? And this also accompanied by a Fibonacci retracement at 23.6%. When we look at it on a 4-hour time frame, we'll be able to see this pullback much more clearer and how it has actually evolved into an overlap as well. Now, sitting below the pivot is another overlap support at $2,750 per ounce. We can see here previously spot gold finding support here in the 4th week of October, a little bit of resistance here in the 2nd week of November, forming a nice swing high resistance at the end of November, and another nice swing high resistance in mid-December. And we can also see here, right, in mid-Jan, gold prices stalling at this level, making a small pullback before resuming the uptrend. So we can see that the lower trend line of the upward channel has served as a strong support, right, for price as it was climbing higher. So once again, the pivot, right? Not only do we have the pivot at $2,771 functioning as a pullback support, we also have the Fibonacci retracement at 23.6%, and we also have the lower trend line of the upward channel, right? Identifying a strong support zone, right? So I'm just going to circle it here, right? You can see here the intersection of these three factors, right? Have identified a strong support zone for spot gold, and that rebound has taken place quite nicely earlier today. Right, so now let's okay, and with spot gold trading close to its intraday all-time high, right? The new intraday all-time high was formed last Friday, 31st of January, and that level is at $2,817.11. So beyond this resistance level, right, or beyond this intraday all-time high, I've identified the first resistance at $2,860, and this level was found by running a retracement, or this extension level at 137% was found by running a retracement from this swing high on 31st of October, going down to the swing low here on the 14th of November. Right, so that's how the first resistance for spot gold has been identified. Now let's move on down to the 4-hour time frame. Right, and let's just fine tune the pivot a bit. So you can see here, this was a swing high resistance that was formed on 24th of Jan, and as the bullish breakout took place on 30th of Jan, this level would then potentially function as a pullback support, which is what has happened as well, right? We see it here, finding support pretty much at exactly the pivot and staging a nice rebound as we speak. Right, so any rebound here, so if you've managed to catch the rebound for spot gold, right, I would identify the first take profit target close to the latest intraday all-time high, and that's at $2,817 per ounce, right? The first take profit target is going to be identified here around 2,817, and of course, should this precious metal continue to climb higher, we can then target close to the first resistance as the next potential take profit target. But looking at the 4-hour time frame, right, it does look like a nice bullish bounce has materialized for gold, and as long as this bullish channel is respected, right, as long as the lower trend line or this upward channel is respected, I think we can expect this precious metal to continue to climb higher. Now on this uptrend here that begins from this swing low on 27th of Jan, ending with the intraday all-time high, we can also run a Fibonacci retracement, and I believe we will see the 50% Fibonacci retracement aligning very well with what is now an overlap support, which has been identified as the pivot here. So a very strong support zone, and we've seen gold prices rebound, and I would identify this zone here between $2,810 and around $2,820 as the first potential take profit target for spot gold. All right, so these are the key levels for this precious metal on the 4-hour time frame as well as on the daily time frame. Right, now let's move on over to crude oil. Right, XTI USD is the instrument that tracks the WTI crude oil futures, and we can see here initially as markets reopened, crude oil gapped higher, right, opening at around where the pivot is at around pretty much at $76 per ounce, $76 per barrel, right? It opened at $76 per barrel, gapped higher before plunging as low as $74.30, and looks to be under pressure as well, right? So today morning, right, if you had got the pre-market analysis, right, we are looking for a potential bearish reversal of the pivot. The pivot is actually a nice pullback resistance at $76 per barrel, right? We can see a little bit of resistance here on 11th of October, and this is where we had identified a potential resistance barrier, which is also accompanied by a Fibonacci retracement at 38.2%. So this retracement was found starting from this swing high on 15th of Jan, going down to the swing low of last Friday, and we can see the 38.2% retracement aligned very well with the pivot, and at the same time, we can also see the 61.8% retracement aligned very well with the first resistance, right? First resistance at $78.08, right? We see a nice swing high being formed here on 27th of August, another swing high being formed on 8th of October. See a little bit of support as well here on 15th of Jan, creating a pretty decent overlap level, which we can identify as the first resistance. That's also accompanied by the Fibonacci retracement at 61.8%. right? So we have seen as crude oil as XTI USD gapped higher, it it stalled at exactly the 38.2% retracement and the pivot, and looks to be making its way down as well. So it's quite likely we can see this downward momentum continue. But however, take note, right? There's an OPEC meeting taking place today. Any changes to the voluntary production cuts by OPEC members and OPEC Plus members could have a huge impact on the direction of crude oil prices. So do be on the lookout for that as soon as the meeting is convened and they release a press statement, or perhaps they're going to run a couple of press conferences. Take note of any potential adjustments to the voluntary production cuts by key members, because any such changes could have a huge impact on the direction of this commodity. But for now, it looks to have respected the pivot, which is a pullback resistance, and looks to be sliding lower. Now, beyond uh, the pivot, right, looking underneath it, I see a strong overlap support at $72.43, right? You can actually see this is a very strong overlap support that's been in place since 4th of June. Now, this level is also accompanied by a Fibonacci retracement starting from this swing low on 6th of December, going up to the swing high on the 15th of Jan. We can see the 61.8% retracement aligned pretty close to the overlap at $72.73. Now, let's move on down to the 4-hour time frame and see if we can fine tune the analysis. And you can see here, crude oil XTI USD closing at $74.80 on Friday, 31st of Jan. It gapped higher today, right? Or if you're on GMT time, it gapped higher on Sunday, 2nd of Feb, at almost $76 per barrel, falling down quite sharply, dropping as low as $74.38, but now looks to be retracing upwards once more. However, right, we can also see on a 4-hour time frame, right, we see that crude oil XTI USD is continuing to trade underneath the red Ichimoku cloud, which can function as an area of resistance. So we have the Ichimoku cloud, the red Ichimoku cloud, the pivot level, which is now an overlap resistance, and the 38.2% Fibonacci retracement. All three factors identifying a pretty strong resistance barrier. So I think any retracement to the upside could be limited as well. And should we see prices stall close to $76 per barrel once more, it can help us identify another short opportunity for this commodity. If anything else, I would highlight, right? I would just like to highlight that previously from 15th of Jan till 31st of Jan, this commodity was trading in a pretty good downward channel, right? You can see here there's a pretty good downward channel where the upper trend line and the lower trend line were respected several times. Right, but now we've seen bullish breakout materialize last Friday, right? So take note, there's a bullish breakout above this downward channel here. But however, I think we could still see crude prices stall at around the pivot, which is at $76 per barrel, right? I just want you to highlight this downward channel, because this downward channel served as a good indicator of identifying potential short opportunities as crude oil prices were sliding lower after making this swing high in mid-Jan. So you can see here it came pretty close to the upper trend line of this downward channel several times, helping us identify a short opportunity, right? And then you can see prices continue to slide lower all the way down before stabilizing at around $73 per barrel. Right, so these are the key levels for XTI USD, right? If there are no further requests, right, then I will move on over to the indices. But of course, should there be any further requests, please do drop them in the chat box, right? But before we continue on to the indices, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and we'll continue the session with the indices. All right. Okay, so I think we've covered most of the requests already, but once again, as we still have time, please do not hesitate to drop them in the chat box as we now move on over to the indices. So let's start with the DAX. Right, the DE40 is the instrument that tracks the DAX futures, and we can see that this index gap low as well, today falling as low as 21,092. Right, so it made an intraday all-time high last Friday, 31st of Jan, and that level sits at 21,802.70. Now, in terms of support, right, I don't really see anything in between the swing high resistance, at the all-time high, and this pullback level here at 20,476, which has been identified as the pivot, right? You can see there's practically nothing that we can see that we can define clearly on the daily time frame, but perhaps on the 4-hour time frame we may be able to identify some intermediate support levels. However, on a daily, right, you can see the major support coming in at 20,476, the intersection of the pullback support and this very significant ascending trend line is going to be a major support area, right? So you can see here this intersection of this ascending trend line and the pullback level, which is the pivot, identifies a very significant support zone. And we can see the DAX bouncing off this ascending trend line several times here from 12th of November all the way till 29th of November. So pretty much a period of 2 weeks bouncing off this ascending trend line. And this is once again where I think it could stabilize should the pullback deepen further. And once again, we see the DAX respecting the ascending trend line here at the end of December and early January before staging a very strong rebound. Right, okay, so first resistance and pivot have been defined. Now beyond the pivot, which is a pullback support, I see a nice overlap at 19,681. Right, this is overlap support that's also accompanied by Fibonacci retracement at 50%. We found this retracement starting from this swing low on 5th of August 2024, going up to the intraday all-time high on 31st of January of this year. You can see the 50% retracement sits slightly below the overlap support. And let's see if there's anything else to identify. No, we can see, right, a swing high resistance being formed here on 21st of October, another resistance here on 30th of October, and then once the bullish breakout took place in the first week of December, we see a nice swing low being formed here with the DAX bouncing off the pullback support on 20th of December, thus creating a very nice overlap. Right, so these are the key levels here for the DAX, right? Let's see if this pullback deepens further, right? As I see a strong support area on the daily time frame that's being identified by the intersection of this very significant ascending trend line and a pullback support, which is the pivot. However, let's see if there's any intermediate levels that we can identify. And on the 4-hour time frame, this level here at 21,101, which was formed on Monday, 27th of Jan, right? We can see a nice swing low structure, market structure being formed here. Right, a nice swing low being formed here, and it's a level where the DAX seems to have stabilized once again earlier today. Right, so you can see here, right, as the DAX gap lower to open at 21,273, it dropped as low as 21,090 before stabilizing around this level, retracing higher. But I think overhead pressures are likely to remain for the indices as well. Right, so we've also now identified like an intermediate support level at 21,114. Right, this level can also serve as a downside confirmation level, right? So that means, right, if this level gives way, we can probably expect the DAX to slide lower towards the intersection of the ascending trend line and the pivot, right? And this intersection can be used in the identification of a potential take profit target for any short trade on the DAX. So take note, this swing low support that was formed on Monday 27th of Jan at 21,114 can also serve as a downside confirmation level. So that means if we see a break below this swing low, we can probably expect the DAX to slide lower. And then if it does slide lower, we're going to be identifying a potential take profit target at the intersection of the ascending trend line and the pivot. Now on this uptrend that begins from 20th of December, we can also run a Fibonacci retracement from this swing low, 20th of December, going up to the intraday all-time high on 31st of Jan. When I look at all the fibs, right, I can see that the 61% retracement aligns well with the pivot here. So let's keep 61.8% and make the label a bit more visible. There we go, 61.8% Fibonacci retracement, aligning very well with the pivot, which is a pullback support that intersects with the ascending trend line. So take note, there's a couple of things going on with the DAX, right? So on the 4-hour time frame, we may have a potential bearish breakout if this level at 21,114 gives way today or perhaps later on today, right? We may see a potential bearish breakout opportunity, and should that breakout materialize, we're going to be targeting a take profit target slightly above the intersection of the pivot and the ascending trend line, which is also accompanied by a Fibonacci retracement at 61.8%. And then later on, right, perhaps in the second, after a couple of days, should we see the DAX stabilize at around this level, it can also help us identify a buy opportunity to play the rebound as well. So take note, if this level does indeed hold once more, it really helps us identify a good opportunity to go long on the DAX, because when we see it on the daily time frame, this ascending trend line is indeed very significant, with the DAX bouncing off the line several times in mid-November, at the end of November, and once again at the end of December and early Jan. So take note, right? We have a potential bearish breakout opportunity. Should the downside confirmation level give way, we identify a take profit target above the intersection of the ascending trend line, the pivot, and 61.8% retracements. And of course, if price does stabilize around this level, it also helps us identify a potential buy opportunity, perhaps in the second half of the week. Right, these are the key levels here for the DAX on the daily time frame as well as on the 4-hour time frame. And then let's wrap things up by looking at the US 500, right? So the US 500 is the instrument that tracks the S&P 500 futures, and we can see that this index has gapped significantly lower as well. Right, it made its intraday all-time high, its latest intraday all-time high on Friday, 24th of Jan at 6,127. Right, this is the latest intraday all-time high. It tested this level last Friday, 31st of Jan, but we saw the indices pull back quite sharply as the White House reiterated the announcements of the sanctions that would be, or the trade tariffs that would be imposed on Canada, Mexico, and China. Right, so indices were already starting to pull back late Friday, US time, right? And then of course, once the sanctions or the trade tariffs were announced officially as well as being executed, I think this week, right? I think they come into effect as soon as maybe today or tomorrow, right? And we really saw a huge sell-off in the indices as well, right? So for the US 500, where I see the first support coming in is at 5,818. This is a multi-swing low support, right? With the first one being formed here on 20th of December and the second one being formed here on 14th of Jan. So should we see this index slide lower, right, and stabilize at around 5,818, it could help us identify a buy opportunity for the US 500. And if that bullish bounce does materialize, right, we can target this pullback resistance at 5,972 as a potential take profit target. But for now, right, it looks like this index could slide lower, right? So any short trades that you may have, right, you can identify your take profit target slightly above the pivot, which is a multi-swing low support. Right, beyond the multi-swing low support, the next major support that I see for the US 500 is at this overlap level at 5,673. Right, we see a swing high, a very nice significant swing high being formed in mid-July. You can even argue here there was resistance from 23rd of August till 4th of September. And then of course, once the bullish breakout took place, this level functioned as a nice swing low support in the first week of October and another swing low support in the first week of November as well, creating a very significant overlap that we can use in the identification of the first support. And this level here is also accompanied by Fibonacci retracement at 38.2%. We started this retracement from this swing low on 5th of August, going up to the intraday all-time high on 24th of Jan. Right, when we look at all the fibs, right, we can see 38.2% sits pretty close to this support zone here. Right, now let's wrap things up by looking at it on the 4-hour time frame. Right, we can see US 500 retracing higher. Right, so perhaps this is where it could stall once again and resume the downtrend. All right, so that's all I've got for you guys today. Right, if there's no further requests, then let's just wrap up today's session. Right, once again, thanks for tuning in to today's live analysis brought to you by IC Markets. Do take note, it's US labor market week uh, in the first week of February, right, is the US markets jobs data coming up. We also have a monetary policy announcement. The Bank of England will release its statement on Thursday, 6th of February at 12 p.m. GMT, where they are expected to make a 25 basis point reduction in the official bank rate. So we can see the pound come under pressure as well in the second half of the week. And take note, ADP employment report drops on Wednesday, 5th of February at 1:15 p.m. GMT. And then finally on Friday, right, we have the highly anticipated non-farm payrolls that will be released alongside the unemployment rate at 1:30 p.m. GMT. And should both these employment reports point to a softer labor market, then we can see this dollar strength start to dissipate, right? Perhaps, and we could see the dollar index pull back, and that means we could see a nice counter reversal in the major currency pairs that we saw earlier today after gapping higher or gapping lower, right? That's all I've got for you guys today. Thanks for tuning in to today's session brought to you by IC Markets. Do look out for all upcoming webinars for the remainder of this week, right? We've got a series of educational and live analysis in not only English, but of course in Thai and Bahasa as well, right? So once again, thanks everyone for tuning in to today's session. I wish you all the best in your trading journey and looking forward to catching all of you at the next session.